Hello and welcome to the 1895 podcast with me, Thomas D.
And me, Rob Cockerell.
And back in the studio, Rob, had a great interview last week, but we're going to be doing a bit of the heavy lifting this week on this podcast. But great to listen back to last week's episode and all that 45V chat and everything that means.
Absolutely, yeah, and you're right. It's going to be a bit of Rob and Tom today, isn't it?
It certainly is. And on 45V, in the last few hours, that has now passed a further... passed a further vote through the House of Representatives, hasn't it? So
yes, it has.
Keeping an eye on that constantly. But as you say, today we're going to be going through another of the big stories over the last few weeks, as we are really amongst the financial results season, aren't we? Coming to the end of it now, but we're going to go over some of the financial results from around the industry over the last few weeks.
We are. We've looked at the health of the hydrogen sector in recent weeks, haven't we? We regularly look at the health of the CO2 sector, but here we're going to actually look at the health of the industry, the industrial gases industry, and by extension, I guess some of those energy sector overlaps as well.
Yeah, I mean, we've got results here from Nippon Sanson Holdings, Air Products, Shell, Linde, TotalEnergies, BP, Air Liquide, Mesa. Yep. So a real cross-section of not only the industrial gases industry, but the oil majors too.
Yeah, absolutely. And I think certainly for all those industrial gas companies, you, as you would expect, you start to see a picture forming with the underlying trends going on. So we'll dive into that a little bit.
Yeah. So it's been a real quarter of contrast, I think, hasn't it? With, most of the big players showing stability and modest growth, which we're going to get into. But there is one big outlier, and that is Air Products and posting a $1.7 billion loss, which is, I think, where we should start this episode.
Yeah, I mean, that's to be expected, right? And we had our Air Products episode a couple of months ago when we looked into all of that boardroom battle and all the implications of that. And really at the heart of that was the business case, as always, and what was happening and unrest at how the business was being managed, really, and that kind of spend going on. So this should come as no surprise.
Yeah, and this is the real first financials since the ousting of Sefi Ghasemi and their new board. Of course, we had that first earnings call about a week or two after, but you couldn't read too much into that. But here we are after a full quarter that they've had to get the house in order, I suppose, get their ducks in a row.
Still doing that. I think we're going to see this play out for a little while, potentially referencing these kind of write-downs and dramatic changes in the business. I would expect for a lot of 2025, we're going to see a lot of that back to basics and as you said, getting the house in order. I mean, it will obviously rationalise a little more as the year goes on, but I'd expect we'll still be seeing references to this.
Absolutely. And a huge part of this earnings call by Air Products at the start of May, I think this was, so about 3 weeks ago now, was that there was $2.3 billion in cancelled projects. And a stat is that this is a higher write-off than their entire 2019 annual profits. Huge amount.
Yeah, huge sums we're talking about here. And again, no surprise. I mean, we talked about those projects and how I guess investors felt they were vulnerable in where those projects and those investments had been made. We knew that they would be writing those down and stepping back from the brink, so to speak. So this is really just the confirmation of the financial hit that comes with that. Yeah,
and the three projects that this is in reference to is a carbon monoxide project that they had in Texas. It was the Wild Energy Sustainable Aviation Fuel Expansion Project in Paramount, California. Now, this is a project that would have seen AP install a new hydrogen plant at the Paramount site and extending the existing Southern California hydrogen pipeline network. So we'll wait to see the knock-on effect that has in the state of California. And also a project in New York, the Green Liquid Hydrogen Project. And this was a 35-ton per day liquid green hydrogen plant that was going to supply hydrogen mobility in the region. We've spoken a lot about hydrogen mobility and the role that that's going to play in the future, but this clearly another blow to that in the New York region.
Yes, it is. Yeah, I mean, I was just about to say, no surprise that two of those three projects we're talking about there are hydrogen in nature. We know that market is in a winter, as we keep talking about. We know there's a lot of problems there. A more pragmatic path unfolding in hydrogen, and this inevitably there's going to be casualties like this. There's just very high profile ones in Air Products' instance, and we do see that elsewhere as well, as we'll get to with some of the other companies.
And continuing on the hydrogen winter that you referenced there, Air Products also mentioned they've got $5 billion worth of what they say is underperforming projects. And again, this is a bit of a pile on to the hydrogen industry from them, with two blue hydrogen projects in Edmonton and Rotterdam accounting for around $4 billion. A green hydrogen project in Arizona, which is just over $250 million, and then also other energy transition projects which account for the rest of that deficit.
Yeah, of course. We also see its flagship Saudi project, NEOM. We talked about that a number of times. That's now, of course, pivoting to focus on green ammonia until the regulations develop for green hydrogen around 2030 and beyond.
So that's a big change for NEOM.
Yeah, exactly. Yeah, so there's a lot of, again, it's all about hydrogen and these kind of this story of underperformance.
And what they call a back to basics approach, I think, going back to their core business, and they've had a real major reset over the last, not even over the last quarter, but over the last year or so. They have cut around 10% of their staff since 2023. So this isn't just under the new leadership, but this is all part of a major restructuring for the company.
Yeah, absolutely. And I think that back to basics thing, so something I wanted to talk about in this episode. For me, I see all the signs here, not just from these financials, but from various KPIs or indicators over the recent months, perhaps even through parts of last year, that actually it's not just Air Products. I think the industry as a whole and so many of the stakeholders are retrenching. They're moving back to the core or traditional industrial gas activities. We see people shoring up. Well, not even shoring up. We see people talking again about specialty gases, about their compression technologies for specialty gases, or their argon projects, or, we see a lot around air gases at the moment. And we see those stories trending at gasworld.com as well, actually, which is an important indicator for us. We see the interest in those stories. So I think if we're talking about the health of the industry or the state of the industry, we're going to see more of this. It's all been sharply into focus recently. People feel they got their fingers burned in hydrogen, and maybe they did. And we see a lot more now about coming back to the core.
We certainly do. Let's just briefly break down some of these results and have a little bit of a regional look at their financial call. America sales rose 3% to $1.3 billion, with operating income down 2% to $366 million. What does that tell you about
this? Is Air Products, we should say.
Yes, this is Air Products. What does that tell you about the American market?
I think it says it's in good health generally. I think it's interesting because obviously it's a very uncertain time with tariffs and trade and various economic policies in the US and around the world, in fact, and the knock-on effects for each other. I think it might be interesting to look more at the next quarter's results in terms of how the Americas market is looking. One thing we do know about the industrial gases business is you tend to see the lag or the effects of economic factors about 6 months later. So it will be interesting in the, I guess it will be Air Products' fiscal Q3, those results to see how things are shaping up in certain regions, particularly the Americas. Yeah,
and we'll have to cover that again on the 1895 podcast for sure. Going across the Atlantic to Europe, sales increased there by 9% to $727 million, with operating income down 3% to $196 million. And in Asia, sales actually fell 1% to $744 million, with operating income falling 6% to $191 million.
Yeah, and I think that tends to happen, in my experience anyway. You see some of these numbers for various regions, often Asia as well. It can just sometimes fall 1%, it might be up 2%, it does differ. What I always find interesting, Tom, we talked about this off air, is how the narratives are built around each company's financials. They've obviously would have poured over all the numbers, and one quarter they'll talk about, the operating margin was really strong this quarter, and the next quarter they'll talk about the underlying volume growth, which is always a good indicator, I have to say. And then the next quarter, it might be the overall revenue and the performance and our best ever quarter. So there's always some narratives that are being spun, I think.
Yeah, I mean, they certainly didn't shout about that $1.7 billion loss, did they?
They didn't, but they could hardly ignore it. So I think they got that out and owned it.
And finally, to round off this Air Products call, I'm sure we'll call back to it a bit later on, but since those results have come out, Air Products has set out plans to scale back its capital expenditure over the coming years. So total spend is going to fall from $5 billion planned in 2025 to around $2.5 billion by fiscal 2030, so a 50% scale back.
Yeah, and that's, again, to be expected following the all of the fallout from the boardroom battle that we saw at the end of last year and the start of this year. There was a feeling from shareholders that Air Products was too exposed and had made too many high-profile, significant CapEx spends. So we knew they were going to retrench like that. It's very prudent.
Absolutely. Now, we spoke about the Asian market a little moment ago. So this moves us nicely on to the Air Liquide financial results for Q1, and they really talked up electronics growth in the Asian market, didn't they? The electronics growth was carrying a lot of weight of them through Q1, with China accounting for 10% of their total sales.
Yeah, absolutely. I think this comes back to the point around the kind of core or traditional industrial gases and growth drivers. We know, just as an overview for the whole sector, that healthcare, electronics, semiconductors, they're all quite resilient at the moment. They're offering good pockets of growth for various companies and the industry as a whole. So, we see this exemplified in the Air Liquide results as well. I think healthcare was up 5%, wasn't it?
Yes, healthcare was up 5%, and it really was a stable Q1 for Air Liquide, wasn't it? Especially in comparison to the rocky Q2 that Air Products had, a 1.7% revenue rise to $7 billion, but really sure, steady, disciplined growth, I think you can call this.
Yes, you can, yeah. And just for any of our listeners that aren't aware, when we are referring to these quarters, the companies can have various offset fiscal reporting periods. So Air Products' Q2 that we just referred to is their fiscal Q2. It is Q1, essentially, as a calendar year. So we are talking about the same quarter with Air Liquide there. That is a good comparison.
Nice and simple, at least in the financial world, isn't it? And just for a comparison for Air Liquide, America recorded 3% growth, Asia also 3% growth, and EMEA a flat 0%. So going back to what I said, steady, disciplined growth. They're very much on track, and as they say, investing as planned on an $850 million Texas modular ASU for ExxonMobil's Baytown low carbon hydrogen project. So they're still going strong on hydrogen.
They are, but I was actually just thinking then as you read that, that's two points in one project there that underline everything we were saying about the industry at the moment. Air gases and air separation units, so a big project in that, which is very much the core, and it's actually for a low carbon hydrogen project. So of all the hydrogen headwinds, it's low carbon as is increasingly labelled that is in focus there.
On to Linde now, and the headline number here is a $1.58 billion net income, up 3% year on year with flat sales of $8.1 billion. So again, quite steady, quite disciplined, small margins, but nothing drastic to shout about there, was there?
That's the exact word I was going to use there, Tom. Disciplined. I think it is steady, it is disciplined, and you know what? Markets and shareholders are all very happy when there's nothing to shout about. I mean, you obviously want outstanding numbers, but you just don't want the kind of headline numbers that we've perhaps talked about with Air Products. So everyone will be happy with that, I think.
And we mentioned some low carbon hydrogen with Air Liquide. Linde very much on the same path and still confident in delivering around $8 to $10 billion worth of clean hydrogen projects over the next few years, which is going to be underpinned by blue hydrogen.
Yeah, and you have to say that Linde have been very on the front foot with that for some time now. They've talked about blue or low carbon hydrogen, very pragmatic in their approach with that and their narrative around it. We saw that in the interview we had with Sanjeev Lamba, CEO of Linde, early last year for Gasworld. He was already talking about that then. So they're very clear in their direction and what their projects and their aims are, basically, and they appear to be delivering against that.
And in fact, Sanjeev Lamba in the earnings call said that Linde were about halfway through that near-term pipeline, supported by two major projects that are underway, even though there is that slower momentum around large-scale green hydrogen.
Yep, absolutely. And again, if we're just going to refer to that, I mean, their sales in the Americas grew 3%, broadly underpinned by electronics, chemicals, and energy as the standout end user market. So again, in the core, in the wheelhouse, as the tier one language likes to go.
And in contrast to Air Liquide, their Asia Pacific sales were in fact down 3% to $1.54 billion, but this was impacted by lower volumes in metals, mining, and manufacturing. And looking at EMEA, sales also fell 3% to $2.03 billion.
Yeah, so you can see how those regions just jockey around from quarter to quarter and by company, and it's really the key detail in that is not so much the headline number for a particular region, but what was behind it. It's probably quite reasonable to have seen those lower volumes in metals, mining, and manufacturing, and that could all be a part of the economic lag from various points last year. So, yep, quite reasonable, really.
So that's Linde, and that's the last of the three majors, I guess. But we do also have results from Nippon Sanso Holdings Q4. As I said at the top of this podcast, not too much information that they've given away here. For the listener, we are recording this on May 23rd, and we're told that we will have further details on that today.
Yes, we should do, yeah. And it's not unusual for some of the companies like Nippon Sanso Holdings, occasionally Mesa Group as well. You don't always get all of the detail that we might like to pore over. No,
but some of the information we do have in one of those sort of pre-calls is that they are targeting capital spending that increased 11.2% of sales in full year 2025, and two major acquisitions in Australia and Spain have been earmarked to support this future growth.
Yeah, and I think the other observation is further expanding in Vietnam, Thailand, India. This is quite interesting as well. We know that Nippon Sanso Holdings, which used to be Teo Nippon Sanso, of course, have had an objective for at least 5 years, if not a decade now, a stated objective, I should say, to expand overseas beyond the home markets, if you like, in Japan and Asia. They very much did that when they picked up the divested assets of the Linde Praxair merger in 2018. And of course, we know Nippon Gas is Europe today. They've got Matheson in the US, and they've picked up various other businesses along the way. So they have been very much on the expansion and acquisition trail in the last decade. Good to see that continuing. I mean, they're not done yet, clearly.
No, and we'll no doubt be covering those acquisitions, those further financial results from Nippon Sanso Holdings on gasworld.com, won't we?
Yep, we will indeed.
Moving on to Mesa now, and this has in fact been their strongest financial performance to date in 2024, and they put this down to regional expansion and sustained investment across its core markets. This is, again, what we've been discussing and what we come to expect at the minute.
It is, yeah. So this is the annual results we're talking about with Mesa, isn't it? Yeah, and they are often very guarded with their results, but yeah, this is a fantastic story, considering the journey that company's been on as well. Also benefiting, should we say, from the Linde Praxair merger in 2018-19, picking up assets in the Americas market, for example. And of course, we've seen Stefan Mesa effectively hand over the reins and move up to the chairman role in the last couple of years, and a new invigorated leadership team at the Meta Group in the last couple of years, and looks like they're doing all the right things with those results, aren't they? Driven by regional expansion and very much sustained investment.
Yeah, and just to break these results down for our listeners, group sales of approximately 4.5 billion euros. That's up 2% year on year. The Americas sales rose to 2.4 billion euros. Europe again held steady at 1.3 billion euros, and Asia was also steady at around 800 million euros. They also secured 2.45 billion euros in long-term financing to support its growth strategy. So this is exciting news going forward, isn't it?
It is, yeah. And I think, again, our kind of underlying theme here of back to basics or back to the core, I mean, they're very clear that this has been driven by that sustained investment across their core markets. And if you look at some of those numbers you just broke down, I mean, their earnings before tax and depreciation, or EBITDA, were 10% up to 1.4 billion euros, supported by new plant startups and a broader customer mix and strong demand from aerospace, semiconductors and healthcare. So very much those traditional growth drivers for the industry.
Yep, so this is no doubt an area to keep watching that growth too.
Yep, absolutely.
So that's the gases industry, but I think we should also spend a little time on the oil majors, as we've had their results through too, haven't we?
Yeah, I mean, there's some broad market indicators we can draw from that. So I guess that's why it's of interest, really.
Yeah, so we've had Shell, BP and TotalEnergies. We've had their results in the last few weeks. To start with Shell, their adjusted earnings of $5.6 billion is down from $7.7 billion a year earlier. What can we read into that?
Well, I mean, we don't study these financials as closely, of course, because it's not in our wheelhouse of industrial gases. But I think what we're probably seeing from these three majors, correct me if I'm wrong, is that resetting of their strategy. I think it was possibly even BP that started to use the language around disciplined investment in the transition, not even using the word energy anymore. I think that's what we're seeing here. They've taken a bit of a hit on the renewables side. It's by no means a huge part of their business, let's be clear, but they've taken a bit of a hit there, and they're probably all in a bit of a reset mode. Yeah, and that is a real trend as we go into BP as well. Just to say on Shell, they do say that most renewables were loss-making in the first quarter, which could be why we see figures like this. But BP, $1.4 billion profit, which is a 48% drop year on year. Like you say, they are in the midst of a resetting strategy and really scaling back on renewables. Yeah, and we see, I mean, it antagonizes many people, but it's entirely predictable. I think they said they're allocating more funding, aren't they? Was it quite a significant amount? Yes, so that allocating 10 billion in upstream to oil and gas projects, which reduces what they are allocating to biogas, biofuels, electric charging, hydrogen, CCS, all of that's being reduced to, I think, around 1.2 to 2 billion, where previously they had targeted 5 billion, I think. Yeah, exactly. So perhaps even more than that. So again, we've got them going back to basics as well and back to their core. But in contrast, moving on, TotalEnergies do still appear to be committed to hydrogen and CCS, don't they? Yeah, quite an interesting trend there. Yeah, bucking the trend slightly. Yeah. So in the last quarter, they've confirmed FID on phase 2 of the Northern Lights CCS project. We've covered this many times on the Gasworld website. Joint venture, I should say, for construction and operation of an electrolyzer producing 30,000 tons of green hydrogen per year in the Netherlands, and also plans to increase investment in green hydrogen and SAF at its petrochemical refining plant in Antwerp. So yeah, quite the switch from BP and Shell. Yeah, I think a couple of things that stand out there for me. Yes, hydrogen, or green hydrogen's getting a good mention there in some of those projects and investments, but it's also, for me, what stands out there is the carbon molecule. They're talking about a CCS project with Northern Lights. So you've got that carbon capture, that kind of CO2 element. You've also got that, I'm sure, with SAFs. And then the other thing is 2 of those projects in, well, the Netherlands and Antwerp. You've got those chemical basins in Belgium and the Netherlands there. In some ways, no surprise that that's where those kind of cleaner energy investments are. I mean, we were in Rotterdam in March for the CO2 summit, and we talked about the reasons for being there then, because they do have a lot of momentum in that strand of the energy transition.
Yeah, and just to touch on their overarching numbers, $4.2 billion net income, which is an 18% year-on-year drop from $5.1 billion, which is slightly down on the previous Q4 results of $4.4 billion. Well, I don't know about you, Rob, but I'm numbered out after going through all of those financial results there.
Think about our editorial team.
Well, absolutely, yeah. Picking over those for weeks. But I guess what can we take away from those numerous results?
I think we can say, look, the industry is in good health. The numbers always ebb and flow, and that might be region by region. We know that some of these write-downs that we've discussed, I mean, Nippon, we didn't discuss that. They've had a project write-down as well of considerable financial numbers there as well. We knew these write-downs were happening or were likely to come sometime soon. We know that hydrogen is now about a practical and a pragmatic rollout. We know that companies, investors are all looking about disciplined investment in various projects or the energy transition. And we know they've got to deliver financial returns. That's it. If we're being really brutal about it, that is what's making these companies tick. That's what they look for. That's what they live for. So I don't think any of that should be a surprise.
No, I mean, it's capital discipline that I've got written down here. And yeah, it is the need for delivering those financial returns. Of course, they've got to keep in mind sort of their emissions targets, but really it does all come down to those financial returns.
Yeah, and they can continue to tick those emissions targets with carbon capture projects and with the smaller scale disciplined investments that we talked about, and that kind of modular approach to these cleaner energy vectors. And
you've mentioned a few of the approaches there and a few of the majors there. So I guess a question for you, tricky question. Going forward, who is now positioned best? If we look at the majors here, we've got Linde and their disciplined approach, but Air Liquide and their, I guess, methodical investment, or Air Products, who are amidst a real rebuild.
And there's a long pause there from me, Tom. I have to be very careful what I say here, don't I? You've drawn me on quite a question there. If I'm speaking entirely personally, I'm taking my gasworld hat off here, listener. I have felt for some time that Linde and Air Liquide are probably positioned best. I have no interest in that, to be 100% clear. I just think they have a very broad, practical spread of end user markets and projects and investments. They've notably not gone particularly hard on any one big investment, any single project that runs into the tens of billions or whatever. And I just think they have a very, it's not unambitious either, but it's a very disciplined, pragmatic approach to their investments. And I think that appears to stand them in good stead in the numbers that we just talked about. And I could go so far as to say that appeared to be what the somewhat uneasy investors of Air Products felt at the start of the year when they got into the boardroom battle. Let's face it, they clearly felt that Air Products was on an unsustainable business path and wanted to change that.
And that perhaps explains the path that they're going down now. The appointment, of course, with Eduardo Menezes being former Linde, and maybe they're now going to go for that approached, measured method going forward.
Well, that certainly appears to be what they're doing. And there's a lot of excitement there as well. The rebuild, coming back, making Air Products great again. Should we say that? Yeah, they're on a rebuild phase. So that's really exciting. And I said, we'll probably see reference to these write-downs throughout the rest of this fiscal year when we see their annual results, of course. that will be inescapable. Everything we just talked about will still be referenced then. But once they've cleared that and kind of cleared the decks, hugely exciting time to reposition and go for new acquisitions or new projects and new investments.
And we'll be covering that rebuild on gasworld.com and h2view.com, where listeners can also read the full financial analysis, which is what we've been picking over today. But we can't go into all of it, can we? We'd be all day.
We can't. And readers and listeners can also look forward to all of the, continuing to see Nippon Sanso Holdings with their acquisitions and their growth path, and Mesa Group and all the others as well, because there's excitement for everyone. I think that's why I say the industry's in good health. It's going back to its core in a lot of ways, but huge amount of optimism ahead for everyone.
Absolutely, and we'll no doubt be back here to unpack our next earnings season of the year in a few months' time. You going to join me for that?
I am. I think we should make this a quarterly thing, a health of the industry kind of update.
Yeah, let's put it in the diary. We'll be back here in around 3 months' time. But in the meantime, do please like, follow and share the 1895 podcast.